Welcome back to this month's Roundtable, your all-in-one comprehensive view of what's happening across the real estate industry, straight from some of the industry's earliest pioneers and foremost experts in technology, marketing, brokerage, construction, cybersecurity. As always, this is a three-part show. Part one, introductions for those new audience members, what each of us does, where we are in our business. Part two, we dive deep into the biggest issues affecting our sectors. And part three, how or what you can do to help improve to outpace your competition in the coming month. I'm Andreas, Senie, founder, CRECollaborative, brokerage owner, commercial director at KW, as well as a technology growth strategist for both the nonprofit and for-profit sectors. Joining me this month is none other than Saul Klein, Realtor Emeritus, data advocate, Futurist, the original internet evangelist for real estate on the residential side. Saul, always a pleasure. Nice to see you.
Good to see you as well.
And Rebekah Carlson, founder and CEO, Carlson Integrated, past president of NICAR, future something rather at NAR. We'll see. Moving forward, things are growing, things are happening. I could not be more blessed today to have you both on the call. We've been doing this a long time, this show.
We have.
So I'm excited to dig in with you both and really see what's happening from your side of the fence. A lot going on here in the Northeast. As usual, I'm going to go to my right first, and that's on my screen, Saul. What's going on in California? What's going on in the futurist world you live in?
Well, California is an interesting place and always has been and will continue to be, I'm sure. So we've got pretty much the same issues, good and bad, that everybody else has, and it just might be multiplied just because of the population. But I think just like anywhere, you look at the residential real estate side, just like anywhere in the country or most places in the country, we find that there's just not enough product. And so the listing inventory is down. The number of sales overall, typically it looks like, anywhere from 5 to 6 million a year was the standard number of home transactions for year after year. And this year people are predicting, 4 to 4.5 million. Again, look at the inventory. Look at all the people that are in property where their interest rates are 3% or less. And so a large number of people that might be buyers today would have to sell where they live now. And of course, if they went out to get a new loan, they'd have to pay almost twice as much maybe for that. And so it's just things are slower, and on the residential side will probably continue to be slower. Some markets are better than others. And we've been here before, right? We've seen these cycles before.
Right. I was going to say, you've been through a few cycles now. Interest rates are just that, right? The numbers change depending on what decade we're in.
But it is interesting because interest rates were artificially low for so long. So there are so many people in 30-year loans at 3% or less. And if they have to sell their house, there's plenty of buyers, but then they're going to have to replace it with something. And the loan on the replacement is going to be 6%. And so that's, for a lot of people, it's like, I'm going to stay put for a while. Unless you have to move, there's no reason to list your house and put it on the market. And we're seeing the result is that the number of properties, I looked at the number in San Diego, it's that this month over last month down, the number of active listings down 11%. Number of closings down about 8%. So it's probably, and I look at this online all the time, right? Every MLS publishes these numbers on a weekly basis. And so it's probably pretty consistent no matter where you go. That's what you'll see. There's not enough product and not building. So the bottom line here is we need to build more.
More housing.
We need to build more housing. We know that. Affordability is a big issue. We need to build more. We need to get away from this not in my backyard to yes in my backyard. That's kind of a political statement, but that's what has to happen. The largest component of a home, the largest cost is the land cost. If you're going to bring anything down, you got to bring the land costs down. The only way you're going to bring the land costs down is if you increase the density. And so we're actually seeing that taking place around the country where you have policy and funding to increase densities, which should, in time, bring down the overall cost of buying a dwelling, and maybe we can get this affordability issue under control, but we will not get it under control unless we can address this density issue.
Well, and too true on the density issue, the affordable need, the necessities here. Policy has to be written, has to come through to help us build. Even the affordable developers in my area, I mean, getting it through because the city and municipalities behind on their affordable housing and forcing that development up takes time, takes money, takes labor. And the inventory, as you said, is not there. And I look at the MLS, and the MLS is the 29th place I look for commercial real estate, right? Because it wasn't built for commercial, it was built for residential. But for the first time in 15 years looking at it, I'm starting to see 20 commercial properties in any given town, 10 listings residentially. It's just a phenomenon to see. There's so little residential inventory out there and commercial brokers are becoming much savvier in technology and pushing it in more places. And then more and more MLSs are adapting for commercial. That it's just, for me, it's interesting to watch the numbers, the hot sheets, everything change and everything evolve in those systems.
I used to sell apartment buildings, and there were some buildings that nobody ever got a chance to resell. And it really was the brokers who knew the people who owned the buildings. Mm-hmm. And there were choice apartment buildings in town, but you never had a shot at those because they didn't go into an MLS. So you didn't really have a marketplace for residential or office or commercial. And a lot of that had to do with the culture of selling real estate, and the commercial culture is different than the residential culture, right? And so what the MLS does at the residential area is it creates these rules where you have to participate. If you're in the MLS residential, you have to participate. You have to put your listings in. If you put your lousy listings in, you have to put your good listings in as well. And on the commercial side, commercial brokers said, well, we're not joining something like that. We'll put our lousy listings in if we can't sell them, but we're not putting our good listings in. We're keeping those good listings in our pocket, and they're only going to be and we'll trade them and exchange them. And so one of the reasons that commercial MLSs never really worked is because it wasn't mandatory that you put all of your listings in it. Whereas residential, it's mandatory pretty much that you put all of your listings in. And once everybody got used to the idea that if we share and collaborate, everybody benefits, that's how the residential MLS works. But the commercial, and I've been involved with many of them over the years, they don't work the same way. And I think the primary reason is there's no mandatory submission rule, right? You put in what you want to put in, you hold back what you want to hold back.
Absolutely. There are brokers that don't co-broke, and I heard this the other day and I loved it. Don't co-broke, go broke. And I was dying on the commercial side. I thought that was a great way to put it. The industry's opaque. Commercial's still opaque. As you just said, industry owners on Main Street, industry insiders, the old guard you're referring to, the guys who used to meet for lunch every month, and I love those meetings. We'd share deals and do deals then and there, and that was it. It's the only way to get to them. That and ICSC annually. Start a deal and finish a deal. Take a year. Go to Vegas twice. Rebekah, you're just back from Vegas.
I am.
And if ever there's an example of why one side of the industry needs more marketing than the other, if I can say that, commercial does, because we pick and choose where we put what and how, because it's very important to our business models and how we co-broke. How is Vegas? How's the industry? What's going on your side of the fence?
Vegas was fantastic. Mm-hmm. So it was well attended, lots of energy, everybody with meetings. I don't love the compression into 2 days. And one of the reasons for that personally is because I had a lunch where I had 260 people on Monday, which kind of shot my day. So I couldn't have meetings on Monday because I was worrying about my luncheon and handwriting name tags at the last second and those sorts of pieces to make sure everybody felt welcome, which left me only Tuesday, which was an abbreviated day for meetings. So I just ran like a little bunny around Central Hall, South Hall, for both floors of South Hall on Tuesday to do my meetings. So there's it is compressed. They're ICSC always evolves this conference. This was my 19th believe it or not. So I've been going for a while, but I also think that some of the attendees have more institutional knowledge of what has worked and what hasn't worked than some of the staff, because ICSC had a big layoff right during COVID.
And a name change. I'm dead set against.
Yes,
But
I have tried to tell multiple people in the past several days what ICSC is and stands for. The former name was so intuitive. You say the name, they got an idea of what you were doing in Las Vegas. The new name is a little bit more challenging to explain through who all is at this conference and what all happens and what all occurs at the show. But it was nice to see kind of people being back. And I have a theory that it's retail's turn. So we've had every product type has, at least throughout my career, everyone's been like the sweetheart industry. And I think it's back to retail. I think retail's on its way up, on the upswing. Certainly, I think that adaptive reuse, and just to Saul's point about housing, when I was thinking about some of the innovations that have happened in the demalling of malls, right? It's adding residential. It's turning a mall into live, work, play. We have a couple of examples of that in Chicagoland. Some of the earliest developers of live, work, play who've been working on this for 3 or 4 years in demalling our malls, and they're, probably 4 to 6 years ahead of other groups that waited to start the demalling process until during or after COVID. So we're seeing those actually, 3, 4-story buildings of residential, and even driving around with my kids, my college kids. My college kids are so old. They would say, like, "Wow, that's cool. That would be such a neat place to live." I'm like, "Yes, yes, it would." So I'm seeing that adaptive reuse. And then I was actually talking to a dear friend yesterday who's at an SBA loan platform, and they're talking a lot about they're administering some funds that were originally for small businesses but are not now for small businesses. So they're applying, the city of Chicago is applying those funds to development of LaSalle Street to redevelop those office buildings into residential. So in addition to normalized supply sources, we're also seeing adaptive reuse as a supply source for hopefully increasing that density, hopefully driving that residential development.
The mixed use. At the end of the day, mixed use wins. We as humans circle wagons. The closer we can get together, the more of us we can get together in an encampment, a community, the better off we are, always, in my opinion. And what better place to aggregate around or congregate around than a mall where I can shop. And I've seen that here. I mean, so many deals. I agree with you that retail is on an upswing. Main streets up and down the different towns here in Connecticut, especially. Vacancies for office is on the rise, the exception of medical coming in and helping out, acting as a backstop to some of the offices. The utilization of these offices really diminishing. A lot of people are pivoting. We haven't seen as much adaptive reuse of office development, but I've seen a lot of interest. Sounds like Chicago's got it together. They're moving forward in this area. California is usually ahead of the curve. Last we spoke, Saul, a few months ago now, they were doing major infill development right around your car wash. I mean, are you going to be a mall? Are you going to be a 10-story mall plus apartment building? Are we at that value point yet?
I'm kind of hoping, I'd like to think 20 to 30 stories on that car wash spot if I could.
There's a height restriction, I'm assuming, of sorts.
Well, yeah, as long as we're not in the flight path, sky's the limit, right?
I want to fly in cars, so hold on. We've got to equate for that. We got to account. So ICSC was a success. Retail's on the rise. Regulations out there. We don't have Dan this month to talk about 1031 or government policy, but at the end of the day, I mean, Saul, you hit it on the head early on. It's pockets, and Rebekah, you also stated the same. There are markets that are doing very well, and Shelton is flooded with good deals. Inventory is growing, a lot of stalled deals, and when it comes to financing, to Saul's earlier point, I can't speak to the residential side, but commercially, everyone who bought 3 years ago, 5 years ago, I mean, there's a lot of good stuff coming on for newer operators that aren't sitting on the sidelines with a lot of dry powder, but the younger, hungrier, high earners, not rich yet type operators who are just ready to move. And that's what we're seeing. That's what we're moving through, at least here in the Northeast. And it's been fantastic.
But on the office side, a lot of people are worried about leases being renewed, percentages of leases being renewed. How will that affect cash flow of the buildings? How will that affect valuation of the properties downstream? So people are taking haircuts. At least that's what I'm hearing. And then there's the danger aspect. And you look at San Francisco and the big companies that are moving out of downtown San Francisco because they don't want their employees to have to go to work because it's too risky, because they might get hurt. And so there's lots of these different dynamics that are going to affect. And then how does San Francisco bring people back to the city, bring businesses back? Once Nordstrom's leaves, how do you bring them back? And these are big
Good
names
brokers
that are moving out, huh?
Good brokers. How do you bring them back?
Well,
Good brokers,
actually,
places. Go ahead, and good marketing.
So no, I have a client who actually has a fantastic marketing company. I'm working with them on a little piece of what they do, but they do a lot of really cool things. But they're based in San Francisco. They're taking San Francisco to other cities.
Yeah.
They're literally doing a PR road trip of bringing the best of San Francisco to Chicago. He's coming this summer. So I was talking to him a couple of weeks ago. He's looking for some referrals for event planners here in our market that could help him set this up. But they're innovation, right? Innovation abounds. They're literally taking San Francisco on the road to remind people of all the great things in San Francisco.
Yeah. But you got to somehow negate the negative stuff that you can't, walk down Market Street in San Francisco today if you dare, right? Yeah. Or Mission.
Well, New York's the same way. There's
New York,
higher crime. Come to the suburbs.
Chicago.
Come to Connecticut. Come to Oak Brook instead of downtown Chicago. There's so many opportunities to be where your employees most likely have moved at half the size, half the space to what you to your point, Becca, office utilization and I mean, we're at least here in Connecticut, we are seeing that toll on these owners. The shadow vacancy, which is really utilization. 33% of the offices that are occupied, the space that is occupied, is actually being used. The rest is just being paid for, hopefully. And Saul, to your point, that's going to impact the bottom line across the board. Municipalities, budgets, taxes, all of it. How do we adjust for that now? I mean, I've been a huge fan of brownfield development and adaptive reuse or mixed use development in those areas. And I think here in the Northeast, that's going to be the biggest ticket, biggest opportunity for those that can afford it. It's just a long-term hold, and not many want to get into that game. I don't know if that's
a phrase that one of my business partners, Chris Lineberger, uses is downtown adjacent. And it seems like the downtown adjacent areas are doing much better than the downtowns are doing. Right. So and he's cites numerous examples around major metropolitan areas where the adjacent areas are doing much, much better.
Well, is it because they're adjacent to downtown, or they have a great economic development director promoting those areas? Westport as a municipality just came out and they're going to be the new innovation hub. They want to be the next tech corridor of the Northeast. This was the claim to fame that happened a month ago with the mayor. And that sounds well and good, but a lot has to go into that for that to happen. And there's a lot to overcome.
Well, and a lot of it's been going on for the last 10, 15 years.
And in many other places, many with more sun and better climate. I believe they call it Silicon Valley.
Even D.C., right? Crystal City and the old Northern Virginia area around D.C. seems to be thriving.
I before I bought this house, it was funny. I looked, there was a sweepstakes I heard about, and I applied for it, and I was going to move to West Virginia if I made it. Why not? They were going to give me a house. I said, I'll go be a technologist in West Virginia. I could open a brokerage there, give me the house and everything else at these terms, if I won the lottery, of course. I didn't win the lottery. I'm still in Connecticut. I'm very happy here in Connecticut, but I applied. Why wouldn't I? So, Rebekah, you're there. You're in Chicago. You're back from ICSC. You're saying retail is the hottest item. Last month, you spoke about different investment groups. Everybody's got a lot of dry powder. What's any change there? Are they coming off the sidelines? More people coming into the game, so to speak. Excuse me.
Tiptoeing off the sidelines.
Tiptoeing.
Quietly putting some things under contract. I think when you have the ability to be a cash buyer and it's not an interest rate situation and you see opportunities as prices come down, then it feeds your business model. I would say one of the most exciting things that I've seen is a handful of alternative financing ideas come forth slowly but surely outside of kind of traditional loans. Those are exciting to see because we all know that for most people, you can't have transactions without money, without financing of some sort. You have a capital stack. And if you're not building that capital stack or not able to fund parts of that capital stack, you literally are kind of hogtied. You can't do stuff.
Right.
Can't do any of it.
Yeah.
You can't develop. You can't buy if you can't, and you can't get there's no point in buying the land if you can't get a construction loan, if you can't get if you don't
can't develop it.
Construction takes a little bit longer. There's a lot of moving parts in the financing area. So as alternative financing ideas come forward, I think there's going to be a lot of innovation there, which is exciting. Now, we have a panel next week for NICAR, which is on workouts and is this deja vu? So that'll be interesting to have. We've got a guy who did all of the REO disposition for a bank in the 2007, 2008. So he repositioned over 100 properties that ended up being bank owned. So there's a piece there. We've got a receiver coming in and speaking. And then we have a guy who subcontracted with the FDIC to close 48 banks.
Wow.
And do 48 bank takeovers. So that's literally a week from today. So next month, I may have a whole different story to talk about as it relates to the economy. But I do think that all of us, certainly the three of us, have been through cycles. But there's a whole another younger generation who hasn't seen this before or has only seen little snippets of it earlier on in their careers. It's a good time to seek out
mentorship,
people who have been through like advisors and mentors who've been through things before.
I got licensed in 2007, 3 generations of development. I happen to like turbulence because then the riffraff tends to disappear. People who don't really work very hard at it. And you're right. There's this younger generation. Let me rephrase that. There's the next generation of realtors and investors out there who don't even want to get on a phone. They just want to text each other. So much is lost, and that's a different conversation.
You sound old, Andreas.
I don't care. It's driving me absolutely batty. Please call. A phone call is never an imposition. Matter of fact, it's a preferred means of communication, because then I can hear you and I can understand what you mean. And when I give you an offer, I can judge how well it's received, right? And I've got texts and emails coming in. I've got literal texts where the clients want to just text everything. Well, great. That makes it harder to understand nuanced communication. For deal making, statements, yes, but nuanced communication is a big deal in this industry, especially now, to understand what people are doing and how they're moving about. And especially given the number of screens I have. That's why I really hate texting. It's the number of screens. But Saul, I mean, you've been, of the three of us, you've been through more cycles. This isn't a paradigm shift, right? There's nothing new. There's nothing reinvented here. There's new technology to help us. Places is one, and Occupy Retail. There's a lot of information to guide us to opportunities, I think is a fair statement, above and beyond your network, which was never available before. I think network still remains paramount, which is why ICSC, mentorship, this having people like you on a call like this is so important. But then there's the tools out there to find information. What are you guys seeing? Any change in the way people are operating? God forbid. And this is not an opening to talk AI. That's on the 15th. with one of the Forbes Technology Council members, Kevin Collins. But what other tools, what other changes are people doing in their day-to-day that you're seeing?
Well, I want to go back, Andreas, to talking about the people and people aspects and closed MLSs or no MLSs, and the way you put deals together where you met every Wednesday at a title insurance company. And if you're a broker and you'd been around for 10 years, you had a pocket full of 10 people who owned apartment buildings or office buildings. You knew what they owned. You knew what the debt against it was. You knew what their tax situation was. You knew that they had some cash in the bank and that they could exchange, and how much property, how much equity, and how much cash. And you would pitch.
Yeah.
You would say, I have a 15 unit, I have a 30 unit building and so much in cash, and we're looking for this. And we called them exchangers meetings. Yeah. And they weren't really, you weren't exchanging, you were pitching. And you weren't necessarily pitching with the permission of the owner of the property, other than you had carte blanche to pitch because you were their broker.
Right.
And you would go in, and if you pitched and it was something that somebody else had a client that might be interested in, then you would write proposals. I don't remember what we called them, but then you write these sample proposals, then you take them back and you'd actually put deals together. Human beings, brokers, would actually broker deals, and it was all about the people. And then on Thursday, you'd go to another meeting.
Yeah.
With other brokers involved, right? And that's the way that it took place. Now, today, you probably could still do that, and you just have more tools to give you more transparency into the status of the properties that you're talking about, right?
The due diligence of it all. And I couldn't agree more with that statement. I gain more from my monthly meetings. They're not weekly, they're monthly now, in my different counties than I do off the tools I use. The 29 listing platforms, commercial, like you said, it's not mandatory, one, to upload deals. It's also not mandatory to pull them down, which means most of what you're seeing isn't actually there. And now that's compounded by the fact that your investor consumer clients are now out there becoming internet sleuths and saying, well, wait a minute, I can kind of do this. These are the newer investors, newer operators. And you're like, well, no, you really can't. And as you explain it, it all comes to light. But just, and all due credit to the CIDs, commercial investment divisions of the local associations, statewide, NICAR, commercial association, right? These specific groups for just putting people in a room and pitching deals, needs and leads. This is what I have. This is what I need. And that's how deals have gotten done.
Haves and wants.
Haves and wants,
Yeah.
needs and leads.
Yeah.
So, I mean, what you're there, here you are today. What's the biggest need you see for the industry then, Saul, as you're looking forward? Let's talk needs.
The biggest need for the industry. Well, for the residential industry right now, it's people putting the financing together to make deals happen and overcoming this artificial obstacle we have, which is low interest rates that have gone on for so long.
Right.
That's kind of locked people in. From a technological perspective, Andreas, we're looking at different retail platforms. We're looking at different data platforms. A need that I was looking at the other day had to do with not only information and what's taking place in the retail space, but the fractionalization of ownership, the ability for people to get in with less money. It's hard to put your finger on what the one need is right now, right? But there's a lot of innovation taking place and looking at a lot of things that are possible. And good time for these things to kind of come to light is when there's kind of a lull in the marketplace, right? When people are willing to look at new ideas and new things.
Yeah, well, I mean, commercial continues to be consistent. As I like to say, there's deals out there, but innovation is finally happening. COVID spurred technology into the space, and this next generation of brokers are out there trying things to do things, as are the investors. Back up, speaking of trying to do things, and given the many needs Saul mentioned, one of which is getting out there, what's going on your side? What's the biggest need from a marketing standpoint, or even at the association level? You're on the ground at NICAR. Saul was literally boots on the ground, 600 associations, one after another of the MLSs, right? What's the change?
So I have a couple of things I want to talk about. One of them is innovation in building, because we're missing Chris, but I wish he was here because I have had like a crazy week of 3 different innovative building ideas coming in front of my eyeballs, which is really unusual. But I think because there's that need industry wide for innovation in building, because of the high cost of development, because of the lack of building materials and those sorts of things, and some supply issues that we've had for the past several years, it is really finally coming to a head with a lot of innovation in that sector. But as far as what I'm seeing a need in that marketing, in that association world where I'm walking, I think the biggest challenge that I'm seeing post-COVID, and I do think it is a post-COVID issue, is there's a little bit of a delayed return to networking, to relationship building, to seeing people in person. It's like it's easy to hop on Zoom. I have, in particular, I'm seeing attendance is starting to climb, but we're still not at pre-COVID levels for most things. The problem with that is that we need to build future leadership, and we can't tell who's actually engaged in our organization. And I think a lot of organizations are feeling this stress that you have the few doing the work that really need to have the opportunity to cycle out and to develop new leaders. But there's a not ambivalence, but a lack of participation that makes it harder to gauge whether somebody coming up is going to be a great leader and contribute and really give to the organization. And all of our organizations are built by our volunteer organizations.
Right. So,
And there's always been the excuse of like, I'm too busy to do it. You wouldn't believe how many people I've gotten to join the board who are too busy to do it. I can fix the too busy to do it, but I can't fix that you're never there and I don't know if you want to do it or not because you don't participate ever.
showing up is half the battle. And how do you get tapped
Right.
for leadership? How do you have that advocate in leadership to look down and pull you forward and propel you forward if you're not present?
Yeah. And I think, from an organizational standpoint, many organizations are experiencing this similar challenge, again, coming out of COVID.
Yeah. It's funny you say that, because it's all about contact sport and being in front of people, getting to know people, right? That's our network is net worth. Saul's earlier point about financing, the clients that I have that are in front of their lenders, that have a relationship with their VPs at their banks, we're not having trouble slowing things down with the slowdown in financing. Yes, there's more due diligence. Maybe there's more cash reserve. There are other considerations that are coming into play with underwriting. But if you've built that relationship, then your rates, your ability to close are there. I mean, that's been the big need today, as we all put out, this capital. But getting there creatively is a relationship business, those creative solutions. On owner financing, something I'm starting to see more and more of. But that's really a byproduct of the fact that the owners are still too. The bank's not going to lend them here, so the owner goes, "Great, I'll finance it." At least part of it, the bank will lend you halfway. But who knows? Maybe we'll have the government step in on some of these reposition plays, which would be helpful. We don't have.
All right.
Go ahead.
Okay, so can I talk about creative building ideas?
Oh, yes.
This is
Sorry, I jumped in.
crazy. You guys have to hear about this stuff. Okay, so I was meeting at ICSC with one of the members of. We have an organization, a real estate association, that we staffed their booth. So Bree from my team flew out there and staffed their booth. And one of their members was chatting, and he's doing a 1,500 acre development, like in Panama. He does really cool stuff. Well, and in Florida, he develops all over. But he's gonna do housing that's made in a factory. Like you build the factory on site, and it makes the houses, and they come out 3 a day, pop, 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 from the factory. And he was touring a factory in Las Vegas while we were there. How amazing is that? So that is number one. Number two, I get an email from one of my NICAR members talking about a concept he wants to learn more about. He got an email from a colleague that he knows in China talking about inflatable warehouses. like, what? Inflatable warehouses? So that's another completely mind-boggling piece for me thinking about. And I guess like sports domes can, like, they look inflated. I don't know if they really are inflated, but they look like little bubbles. So inflatable warehouses. So that's number two. And then I talked to a gentleman who's been in the industrial development world, and he's looking at modular building. I was speaking with him yesterday. He's been looking at it for 10 years, and he says people just now are starting to listen to modular building. It is so cool to me that in 1 week I have all of these completely different concepts that are floating around in front of me. What are you guys seeing in this innovation piece of development and building and in the marketplaces?
Saul.
Elon Musk talks about it. If you go to Mars, and then you've got you're going to have to take the raw material that's there and turn them into houses, right? You're going to have to be able to do something. Imagine the technology to do these kinds of things is there. People are working on it. And then is there practical application for it here and now? And, probably absolutely there is.
Well, it's modular building, not a new thing in my opinion. I mean, steel construction, steel modular. Before that, pre-cut lumber up to, put it together on site. Great puzzles. I mean, you're decreasing cost. That's a way to get to that necessary capital stack number. If you can remove those costs, there are cranes with, AI-driven models that lay the bricks at something like 300 times the speed of a team. So instead of tilt-up development for, let's say, a grocery store, your anchor, and taking months, it's now going to take a couple of weeks to get that foundation up and running, that shell. I mean, that's incredible to me. I haven't seen it. I've seen it on Facebook. Facebook realizes that I like seeing it, and I see a lot of it, which I don't like. But inflatable warehouse is definitely new to me. And when you say Panama, I think of the Panama guy, John Hill, who was a commercial guy I ran into years ago overseas, and that was his thing. He was the Panama guy. Are they doing inflatable and factory development overseas? I mean, that's their solution. Is that what you were hearing to the housing problem, or is it just a solution to how to build housing for the future?
It's a solution of how to build housing, but when you think about like the broad implications of really, really affordable housing in that manner, think about like poverty alleviation. Think about people in other countries that would benefit from having a little factory like right there that's popping out little houses that are small but sustainable materials that people living with dirt floors, people living without walls. The sheer impact that could have is just, it's on a global scale, is to me incredibly exciting.
Yeah.
Think about it though, Becca, even if we had that here, the problem we would face is the governance side of it, right? And the fees and the insurance and all of the costs that would quadruple price, all of the savings that would come from the manufacturing side would get gobbled up by the bureaucratic side of this. And that's one of the things they're fighting in California, right? With laws to be able to increase density, get by the local ordinances, change building codes, because these are all things that restrict growth, right?
Yeah.
Laws haven't kept pace with innovation as it stands today. God forbid we start inflating warehouses in Connecticut. I don't even know what that would look like. Although if we do, they should be dirigibles, because we can't make any more land. Let's put them up in the sky and ship it down. But it is incredible. Some of the things we're seeing out there. CRETech's coming up, and I can't wait to see the latest in prop tech. CRETech New York, which we'll talk about a bit later.
Ooh, yeah, because I'm coming.
Yes, come, Saul, please. Well, if we can get you to come from California, come on over. CRETech New York. CRETech London was a huge success. New York is coming up, September 19th. The Javits Center is going to be the largest event yet for CRETech. Those that don't know, CRETech was one of the early on adopters, early on events. It was originally CRE Disrupt. It was back when there were 80 technologies in the room. There are now 15,000 different vendors, technologies, things doing things. use that code as we threw up on the screen. It'll be in the show notes as well. So much innovation happening, but at the same time, I'm pushing everyone under me as a broker, as my clients, hey, go back to basics, because to my earlier question, Saul, there's no paradigm shift here. There is a return to, does this pencil out, and we are no longer at zero cost of capital. That's what you're saying. Yeah. This ability to borrow for basically nothing. But the banks, Becca, you mentioned, and it's an interesting thought. It's an area we're focused on coming into this quarter is getting our relationships with our banks, getting the REOs, getting line of sight on which banks are struggling, closures, which banks are increasing their rates to make up for shortfalls potentially in their portfolios, where they may call those portfolios, getting in front of those owners now so that we can be there at their point of need, providing them an early warning to say, hey, that your bank may be in trouble. They may come call your loan. Let's talk about selling it. Let's talk about moving it before you're one of 100 properties that need to be moved in this community, because it's a community bank. And the majority of commercial business is done through community banks, as far as I can tell. All I've been doing it. What else? Go on the regulation side, Saul. I know the MLS has been a big thing. You said something, no MLS before. The MLS has been trying to standardize for years. Are they any closer to that unification on the residential side? Are we going to see that?
Are we going to see what side of it?
Unification of the MLSs.
Well, we have seen, I think we're at like something like 600 MLSs now, and we had 1,200 not that long ago. So there is, consolidation of multiple listing services, as there has been consolidation of local associations of realtors. So you'll probably see more of that. There's this litigation going on that might change the way that residential real estate is sold and change the MLS, because the offer of compensation is being challenged civilly, and probably as well by the Department of Justice. So we're not sure how that'll turn out. NAR is very positive about it. Of course, that's NAR's job, is to be very positive about where they see the outcome. But as I look at those cases, I can see the plaintiff's case. I can understand the plaintiff's case. And so because I can understand the plaintiff's case because of my experience in the industry, that means jurors might also see the plaintiff's case. And so we're talking about potential billions of dollars in damages, elimination of an offer of compensation clause, which is the foundation of MLS, which interestingly enough has only been the foundation of MLS since about 1993. Prior to that, there really wasn't this offer of compensation. What we had prior to that in 1993 was MLS was an offer of subagency. And so perhaps a solution to get around the possible decision against offers of compensation might be that we revert back to an offer of subagency, which is what the MLS was prior to agency disclosure laws in the 80s and the official change in the mid-90s.
Commission becomes a key part of negotiation and set by each broker and independent of that system. You're not tied to the MLS.
Everybody works for the seller under an offer of subagency.
Well, we all get paid by the seller in most cases, and if it's, at least that's what we hope for, unless they're unwilling to pay us.
Well, so interesting, because payment of compensation doesn't indicate agency, right? So it doesn't matter who pays you. Who you represent is who you represent, regardless of who pays you in real estate. Mm-hmm. And so it was prior to 93, where if you joined the MLS, and this is the glue that held the MLS together, was that if I took a listing and put it in the MLS and you wanted to sell it, you became an agent of me, and I was the agent of the seller. Therefore, you were a sub-agent, and the seller compensated me and I compensated you, and the buyer was a customer. And the first 75 years of MLS on the residential side, that's the way it worked. And that changed in the 90s, and when they eliminated this offer of sub-agency, they had to offer something to hold it all together. And what became the foundation of MLS was an offer of compensation. So you could represent the buyer, but the compensation still came from the seller. And that's been the model since, 93, 94, but now that's being challenged. So it'll be interesting to see where that all goes.
It's one of the most common things I bump into when I run into new resi-commercial agents. We're trying to work deals, or commercial agents, and that joke before, co-broker, go broke. Many brokers don't offer out compensation. They're not a member of the MLS. They don't have to. It's not part of the terms. And many agents out there don't know to ask. They try to play in the commercial pool, and all of a sudden they get to the closing table and there's no money for them. And having that conversation with your buyer at the end, like, wait a minute, you've got to pay me, is certainly a sticky one to have, which is, another reason why you shouldn't just you shouldn't dip your toe into commercial without the training, the knowledge, the mentorship, and guidance that's available out there. There's plenty of it out there somewhere. Speaking of guidance, I can't believe it's 6:46 already. Here we are. We're in June. We have some new tools. We're relying on our networks. We're pushing back on our networks, trying to build those relationships, offering out. I mean, in my case, I'm looking for mentees. I'm sure you guys have done the same. I've heard that siren call that we just discussed of who are the next leaders in different areas at different companies. It's happening everywhere. And I'm also seeing a lot of exhaustion from certain leadership in certain places. Like, come on, like get to it already. Where is my next leader? And how do we find them? We meet in the middle. But I just continue to put my head down, meet you guys every month, and enjoy this call and keep working deals while I see more and more people sort of aggregating online. And I'm happy to hear ICSC was a big success, even though they did downsize a bit. And as the innovative commerce, something or other, as opposed to the International Council for Shopping Centers, it's tough, right? I mean, your name, your brand, what you do has to be clearly evident. Or else, how is the next generation going to even figure it out, let alone join and show up to those events?
Andreas, I'm going to go back to something you talked about earlier, because I just heard this expression the other day, and it's experience. People are looking for experience. So I was talking again to Chris Lineberger, and so I had to order his book, right? And after I had a conversation, the option of urbanization, of urbanism, right? Investing in a new American dream. And he talked about the hunter-gatherer phase and the agrarian, right, phase, and then the industrial revolution, and then the knowledge revolution. But now it's the experience revolution. And so you guys were talking about retail and retail coming back. And I guess part of what retail now is experience.
Very much
right?
so.
And so that kind of all makes sense. Yeah, when people go out, they go to the movie, they go to the skating rink, they go to shows. It's experience. And this generation now, the youngest or whatever we might call them, generation is looking for this experience side of things. And so there's opportunity on the experience side.
And hopefully not experience through the VR glasses that Facebook also shows me all the time. That
virtual experience.
In-person experience,
real experience,
right? but real experience together, not texting. Back to that, out there and growing, and life experiences, how to pass them forward. At least here, malls have been shifting to experience. Fashion, fun, function, furnishings, and experience. Outdoor centers have done better because they had the picnic area, right? They had enough to draw people. But now, as more of these centers, larger anchors in these centers are closing, maybe turn it into a trampoline park, something for more of an experience.
Yeah.
We'll see. I mean, that's the goal. By the way, if you have 12,000 square feet, we've got the trampoline park that needs a place. As an example, it's top of mind.
Needs and wants.
But absolutely. Needs and wants. I've got a list. Any broker has a list, and any commercial broker always has a list, and they always carry a business card, a hard card. Sorry, another jab at the residential side of it. The one other thing I've really noticed to push for, especially with these with the smaller investors is cash flow properties, car wash, laundromat, any of these businesses. If they can get the real estate attached, they're all about it. The banks like it. Are you seeing that as well back on your side?
I'm just thinking we haven't had a solid update on the car wash today.
Yeah, it's been cloudy and overcast here in San Diego for the last month. It's May gray. Now we're in June gloom, and then summer will get here. But we've had the car wash has done well, and will continue to do well, just because this is a driving economy,
and it's California.
In California, right? So people need to wash. And they can't wash their cars at the apartments they live in, right? So typically against the rules, they don't want. And then and also there's no water capture if you're washing your car at your apartment. So if the city kind of likes the idea. So no, this car with this, it's interesting though. For many years, we couldn't get a loan on the car wash. We had to get private financing. So whenever we wanted money, and we had a network of people who would always loan us money, and back then we would pay 10%. We'd borrow money against the car wash. We'd pay 10%, and we'd use the money for whatever. Because to get an SBA loan or any type of loan with a business on it was more difficult than getting a loan where people paid rent to live in the property. That was the situation for many years. And so it's been years. Our car wash has been paid for a long time. And so we haven't had to go out to look for this. But early on, we've owned the thing for over 40 years, right? But early on, you couldn't just go to a bank and get a loan against it. It was more difficult and more expensive. And so we actually raised money privately. Whenever we needed money to do things, it was all through private sources. And so you're saying it's easier today. I haven't tried, but it's easier today because you're right. You got cash flow. It's greater return on the money. Mm-hmm. It's, people don't need to wash their cars where they need a place to live, but they do wash their cars. And so you'd think that it would be easier, and we just haven't tried in a while. So is that what you said, financing businesses easier today than it has been decades ago?
It seems that these investors are hungry for cash on cash return, and buying a building with that cash flowing laundromat, dry cleaner, car wash, some part of that mixed use that they could also own. They're all over it. And getting the numbers to work where the owner is willing to sell and getting the repairs. I mean, they're just a little complex on the inventory side, machine upkeep, what have you. I'm no car wash expert. Maybe I should call you on a few. But it seems they're readily available. The people owning them are ready to move on from them for whatever reason, which is an opportunity, right? Businesses are looking to move and expand. To Becca's point on retail. Fairfield, Main Street. I didn't see a single vacant retail sign. I've got a lot of vacant office. I've got a lot of vacancy everywhere else. These businesses, plenty of people always looking to build their life, their business. And TD Bank, we were with them the other day. They said they're ready, willing, and able to loan on good business models, right? And economic development, small business groups are there to support it. Grants are there to fund it. I mean, the money's there. Put the business in. Get an SBA loan. Finance 100%, 98% of your deal through that SBA loan. There's your capital stack if you can do it on a smaller deal. You remember SBA with a property, you have to have more than 51%. Not remember to you two, to the audience. Which is, it's just an exciting time, I think. You just got to put the legwork in, truly, day in, day out. And there's certainly a lot of dead ends to avoid that leadership, mentorship, people that have been here before can help you avoid. It's easy to go chasing dreams. That's my number one thing. Don't chase dreams. Chase revenue.
I'm working with a company that builds, for lack of a better term, back-end MLS systems, right? Okay. With blockchain type of technology. And their vision is to create MLSs, and NICAR's tried this for years, hadn't been able to do it, around the world, country by country. And if you can build something like that on a state with a standard, right, a data standard of some sort, then you can start to link these countries together. And before you know it, you really do have a worldwide marketplace for real property. And I thought that was kind of multilingual, multi-currency, blockchain, privacy, being able to co-op with who you want to co-op with, and being able to expose not only the property and the characteristics of the property, but field by field. You know, Becca, I want to give you 10 fields. Andreas, I only want to give you 5. I mean, right?
Well, that's credentialed access. Yeah.
Huh?
Leveled, provisioned access, credentialed access, different.
Yeah.
When you say fields, you mean, individual points of data, not a field, not a hectare in Mexico, not an acre in the US, but therein lies the problem. We have yet to get to a standard. Rezo is an organization that's very close and has a standard. But in the U.S., we have yet to get to a standard in the residential world, let alone the commercial world.
Well, so the concept here is that it's more difficult here than it is in a country that doesn't have an MLS.
That's true. Less developed country, it's much easier to come in and build this technology and grow it. India has got, I think, one major exchange for properties. They were the first, the biggest, the baddest, and now they're at the top. They're the co-star of India, whoever they are, because I'm not going to name it. At this time, but they didn't have to deal with the regulations and everything else. They didn't have to deal with privacy concerns. I'm very curious how this company you're working with is handling that globalization aspect when the entire world is in the middle of a privacy crisis and a data ownership crisis on who owns what and where. It's very hard to go global at once, but country by country, strategically, nation by nation.
Nation by nation, and the biggest areas of concern with regard to privacy, I think, is Europe and California, right?
Yeah, and I think there are 3 other middle states now in the U.S. with laws.
Yeah,
Ireland is also got quite a bit going, but I digress into that conversation, and that's one we can absolutely have on globalization, new markets, and then candidly, AI is going to help machine power, computing power to get across those borders, and the evolution of fintech and the ability to transact across borders and track it through blockchain in a way that's actually in an immutable ledger, right? So in a way that people are comfortable with is an exciting time all around. Top of the hour, guys. That went incredibly.
That went fast.
Well, as I said, this is it is the shortest hour and my favorite hour of the month talking with you. Thank you for coming on to host the show. Thank you to our listeners for coming on and watching. The show continues to grow. Facebook, LinkedIn, Twitter, everywhere we put it, although we're getting better at putting it at new places. How and why, or should anybody reach out to you, and for what over the coming month? Or what's the book you recommend? Saul, you cannot pick up the book you just showed us.
I wrote it down. I'm going to order it.
Yeah, well,
no, he's got another one.
It is the option of urbanism: investing in a new American dream by Chris Lineberger. Chris, a great guy, professor emeritus at George Washington University. A book that I read. I don't know if I recommended it last month, but it's just a fascinating book by Peter Zeihan called "The End of the World is Just the Beginning." The end of the world is just the beginning. Fascinating book. And you'll enjoy it, guaranteed.
Yeah, I've enjoyed every recommendation you've given me. I think one of the favorites, what was it? The Hype Machine. Here's a throwback. The Hype Machine, if you haven't read it, was an incredible book, incredibly insightful, and still applies, I think, in almost every way today. So there's my recommendation.
Okay. I'm going to give you another one. It's The New Grand Strategy by another one of my partners. Actually, 2 of them. The New Grand Strategy. And it has to do with sustainability, prosperity, security, all the things we've been talking about.
The New Grand Strategy.
The New Grand Strategy.
Well, and not a shameless plug, but Commercial Shift was an incredible book for brokers out there who are just don't know which way to turn. You're new to the business. There's definitely literature, ways to get training, education. Becca, what's your book or one big piece of advice for our audience?
So my book, I actually just ordered it. I found that one of my LinkedIn friends, Esther Deutsch, wrote Musings of a Networking Maven, which a practical guide to self-awareness and business networking skills. Since I have ordered it, I am super excited. She's absolutely phenomenal, and I know that it's going to be very instructive and a training manual for younger people who are coming into the industry and going out and networking to have as a guide on how that kind of works. I think is going to be really helpful. So I'm excited to read it, and I just ordered it, and I'm going to read it this weekend. So
Well, that's fantastic. With that, it is going to be a wonderful June for everybody out there. It can only go one way. The only direction God gives us is forward, and business is booming if you know where to look and how to look. Mr. Mendoza, thank you, our producer. Lead us out, please. And for those listening, don't forget to tune in on the 8th for the sector interview with Larry Rothenberg, president at Agentis. We're going to talk about clean air tech with the wildfires in Canada and the terrible air quality I'm going through here in Connecticut. It was going to be a great listen and certainly applies to what's happening in your day-to-day. And then June 15th, sector interview with Kevin Collins, Charlie AI CEO, Forbes Technology Council member. Super excited to dive deep into how AI is used and misused, the true behind-the-scenes look on the evolution of the space and what you should be doing or shouldn't be doing. As always, download our show anywhere you get your audio and everywhere you get your video. And don't forget to subscribe to our YouTube channel or simply ask your Alexa device to tune into the CRECo.ai Roundtable. Please do share, rate, review us, connect with us, ask questions, tune in next month. Thank you again for tuning in. Thank you again to my co-hosts, and thank you to the audience. Have a wonderful month of June.